Todd C. Slater, chairman of the Simple Investor, joins us here today. Todd, thanks for joining us. So let's focus on what you know best, which is real estate. There's huge volatility in the market right now, the stock market that is. Most volatility that we've seen in a number of years over the course of this past week. How has this whole coronavirus affected the real estate market? Will it grow from here, or will we see, today, for example, watching Grant Cardone on Instagram saying he thinks there could be a housing crash in the U.S. What are your thoughts on what this has done to the Canadian real estate market?
Well, I appreciate some people's opinions, but I'm going to probably stop it there by saying I don't agree with a crash. The one important thing everybody has to understand is there's a lot of equity sitting in Canadian real estate right now. Okay. The Bank of Canada and all the banks always kept a leverage point that was only allowed. So if there was any form of reduction in price, it's not going to be like a 2009 turn in the US. And this is where I think the US market always gets ahead of itself. They gain a little bit of confidence, then they get overconfident in their marketplaces. And this is what we've experienced, even in the last 10 years as a run up from their market crash. If you remember, in 2009, the Canadian real estate market only adjusted about 5%. Mm-hmm. So overall, that is nothing in comparison to the US market. Now, in Canada, as we know, we've experienced some pretty huge highs. 2017 was probably the biggest rise that we saw. And what happened was the Canadian government, they wanted to kind of soften the situation. They didn't want people to keep going into further debt. So that's why they implemented, first and foremost, foreign buyer tax to stop foreign buyers coming in, escalating our prices. Second of all, in 2018, at the beginning, they turned around and they implemented the stress test, which just meant people have to be able to qualify, at a higher interest rate, because this was the anticipation of the markets. Now, of course, today, we come forward 2 years, a completely different animal. The stress test is still in place. And so anybody that has taken on any form of debt in the last several years, being mortgage debt, they still had to qualify at a higher rate. So first and foremost, I don't see us having a lot of foreclosures on properties other than potential job losses that people would then take a look and say, can they still afford it? But right now, the Canadian federal government, the provincial governments are all, hopping on board saying, listen, we're going to work with the major lenders. We're going to let people delay, obviously, their mortgage payments. They're, just so you know, they're not foregoing the payment. They're just merely stating that they're going to allow you to put it on the back end.
Okay.
And this is the same thing as rent. If you own investment properties and let's say your tenant can't pay rent, it doesn't mean your tenant won't owe you the rent. But what they're saying is there can be no eviction based on loss of rent. Now, there's lots of people that are not going to be in a financial strife. We've got people that are on pensions. We've got all sorts of other workers out there. But there is a bulk of the population that this could be very much a struggle if we go past a certain point. Right now, the layoffs are just starting for a lot of industries. So right now, everybody's probably had enough money in the bank to make sure that their mortgage payment, everything's paid up to date till today. It's what happens moving forward and what the length of time. Again, I don't foresee a market crash by any stretch because no matter what, when we stick our heads out at the end, and could it be, 3 weeks, 3 months, ultimately in the end, real estate will always have its value. And that's really important for people to understand.
One of the things, and maybe you can talk about this a little bit more, that I see in Canada is that we're an aging country, and more notably here in the province of Ontario. We have close to 15 million people. And I know sometimes, Americans will look at the Toronto market and think that it's a housing bubble. But, you and I have had this discussion before, what was the investment value in Manhattan before and after the financial crisis? And it stayed pretty consistent. And that's what Toronto represents for the country of Canada, because it's the economy engine for our country. And as we age and immigration starts to pour more into the GTA market, there's just a lack of supply everywhere. And whether you're in small markets close to Windsor or even small markets close to Ottawa, it appears that the housing market continues to flourish. And a lot of it has to do with there's just not enough properties out there for people to live in.
No, that's a great point. And truth be told, if we look at numbers, Shad, right now today, we are probably in a deficit of 10 years of inventory that is necessary to maintain a marketplace.
Wow.
So this is the thing. This is why the supply and demand, and this is why the run-up of the condominium market in Toronto. Now, also, let's keep in mind that Toronto is a world-class city. Okay, this isn't just a whimsical, hey, let's go buy a Toronto condo because it's cool. The reality is as you mentioned, Ontario is the biggest employment driver in Canada. And this in itself shows that, Ontarians are going to have strength in the future with real estate values. What happens when other countries, don't recover as well as, let's say, Canada will? Where are the people going to immigrate to? Well,
Right.
guess what? Canada, with the style of open borders that they have, their welcoming attitude towards people to come and immigrate here, I would say that, we were targeting somewhere around 115,000 people to immigrate into Toronto. I think once we get past this, on an annualized basis, I think, we are going to see a real estate boom and an immigration boom.
Really?
And I think this is something that people have to be aware of. So when you start analyzing your current real estate portfolio, if it's just your primary residence or in any investment properties, what you want to do is just, stay the course, because ultimately in the end, in the next couple of years, we are going to see a mass run up in values and demand for real estate in Canada.
As we sit here and we talk about, the technology and everything that's changed over the course of this past week, and everybody's embracing the changes as to what's going on. Showings have obviously dropped off because, obviously self-isolation. How much of an effect do you think this whole coronavirus will have on the industry, and how do you see it changing probably in the immediate term?
That's a great question. I think I've got kind of a multi-tiered answer to you. I think if we take a look at the real estate industry itself with the professionals that are there, I think the ones that have adapted well to technology are actually going to continue to work, even right through any form of close, shutdowns, anything else. There are people that must sell their real estate. There are people that must buy. They're going to end up homeless because closings. Now, the only thing that could halt everything is if we have a complete stopping of funding and land registry. So if those two parts of the real estate industry do happen, it won't be for long, but it would happen. And then, yes, everybody's on a 2-week, 3-week vacation. Now, if we talk about, a slow progression up, slow progression down, the people that are well versed on marketing technology are going to do exceptionally well. But, this is going to be a good shakeup for the individual real estate agent, knowing that they have to be, stronger, more professional, more about technology, and be able to work with people. You and I talking via, a Skype format or being able to do virtual tours for people, this is going to be one of the things that if people are on top of this, they're going to succeed. They're going to do exceptionally well right now. They're going to be the people that people are thinking of that, listen, as soon as we get out of this, I'm going to sell my house. Great. The buyers are ready. The sellers are ready. And all of a sudden, we're going to start to see the market take off. Interest rates are going to stay where they are. But when we talk about values in GTA, could we look at a slight adjustment by 5%? It's possible. But the 5% would be very short-lived. And why I say short-lived is because as soon as it goes down, people will get antsy and want to buy up immediately. Okay,
Right.
so if we do see anything, and we've seen that. We saw this in
Why would you see a 5% correction, though, with the amount of people, like we were talking earlier, about just the overall, there's just a lack of supply, and you see it being strong for the next 10 years?
Well, the only reason why I say the adjustment, and it would only be a month-over-month kind of thing, it's not a year-over-year perspective, but we do have to realize that with fear, people are just a little bit slower to act. Okay,
Right.
and if somebody has to sell based on their commitments, then ultimately in the end, yeah, we could see that slight adjustment. But a market crash, not possible. Okay, and I know a lot of people are saying, yeah, but hang on, what about employment? Well, we're assuming that the bulk of the employment that gets affected is not going to A, recover, B, be compensated. Okay, I mean, they've already started to put stopgaps, so this means that you're not getting rid of per se your primary residence, and ultimately in the end, if you are going to start selling your primary residence, there's so many buyers that are going to flood back into the market that have been gainfully employed, that are able to do the needful, that they're going to come back in the market, and they're going to come back in droves.
Right.
Because then, if somebody says 5% affordability, all of a sudden people are going to say, wow. Well, as soon as more than two people say, wow, all of a sudden you're going to start seeing the market heat up again.
Right.
We are in an unprecedented world market, but at the same time, we also have something that everybody in the world will search out. And Canadian real estate is going to remain strong. I always encourage people never to speculate. But ultimately, in the end, there will be the speculators that have been sitting on cash that are going to start coming into this market. They're going to start grabbing it up, full well knowing that this market's going to rebound. And when it does, it's going to rebound very strong. And rebound just meaning more people coming in, more transactions. Again, we're not always talking monetarily. We're taking a look at just pure numbers.
So last question I'll ask you, just a lasting message for, whether you're in the stock market or real estate investor. What are you seeing day to day within real estate that maybe the average real estate investor is not? What would you say to them?
Well, first and foremost, I connect with all the brokers, all the banks. They're saying they're still lending.
Okay.
Right now, they're still basically reciting values that are concurrent. They can only utilize past sales history within the last 60 days. There has been no downturn in real estate at this point financially. So if you're going to be closing in the next 30 to 60 days, you're being established as of values in February where we had no blip in the market. In fact, the market started going on an upsurge as we were coming into the spring market. So first and foremost, that's very important that you understand that. So your financing should be just as strong. Now, will banks be, cautious? Yes, they'll do their due diligence. The one thing for those of you that do get laid off, the bank does need to know that you are gainfully employed. So right. Making a real estate move at this time, you're better to get called back to work. Non-interruptions, use your T4s, and you'll be fine. So there's some preparatory things that people have to do if they're going to get involved in this current real estate market. Okay, at the Simple Investor, that's one of the things I try to encourage and educate people on. And this is why we do as much as we do, to educate people on how to look at real estate as it sits today. I can sit there and tell everybody, wow, what a run up that we've had for the last 10 years.
Right.
Well, it doesn't see a genius to see the price point from A to B. But how to feel the market out, where you should be in the market, what you should be looking at, what you should not be looking at, what you should be doing, where your leverage points should be. These are all things that are very important. Again, I see the market itself staying strong. You're going to maintain your equity. Just again, if you're going to start wanting to acquire more real estate in a speculative approach, be very cautious because you could over leverage yourself and the banks may not accept it. So the lenders are the big part. Shad, the one thing I can tell you is that when listening to all the brokers, none of them have experienced something like this, but a lot of them have experienced market crashes. The funny thing is the indicators for a real estate market crash are not there.
Right.
And because of the way employment is, we're not laying people off because that industry is no longer needed. Mm-hmm. See, the motivation for these layoffs are for health reasons,
right?
Not because of the lack of desire. And this is where I think the stock market and the economists aren't really looking factually enough at that indication. Yes, there are layoffs, but are you going to tell me that as soon as we do clear this health concern, that we're not going to start seeing the restaurant industry come back, that we're not going to see car manufacturing come back? We know for a fact that technology is even going to go further.
You're right.
We've got right now Google hiring, we've got Amazon hiring, we've got Walmart hiring. Okay, so where do people have to look? Well, they have to look right in their own yard and realize the asset they've got is the greatest asset they will ever have, and they should hang on to it.